after the information I've given you, don't forget to follow the TikTok by clicking the plus button, and of course going to the Heistfx YouTube account so that you can wait and see the magic that will happen from a $36 investment in the profile field. Let us see how much you can go with the account. Just a recap from last week's video. People from the Oliver Nation, Wagwan. The Macron made a chip on the thing better known as the Heistmaster over the Heistfxacademy. We will keep it simple, nice and easy. And if you don't know that by now, then you're in big trouble, people. Yeah. Now with our one trader, one shot, we are able to get sniper entries in the market and good and strategic exit mechanism, so that at the end of the day we can buy the thing after the market. Yeah, and as always we said, a tip is smashed is a case done and closed. That's why in this video I want to explain the exact strategy and the events which took place for me to be able to buy the thing out of the market and pass the first phase with only one trade in 2 trades and with 100% win rate strategy. Now at the end of the video, the key lesson to take home is patience in the market can lead to positive results at sometimes. It's not only about analyzing the market, but how are you patient to wait for the market to analyze to play out. This is going to be a great video, so make sure you watch up to the end because you'll be learning a lot. Panditing.
One trade. Hey!
I'ma do shit my way.
One shot.
So you can go kick rocks. I'ma stack bricks up, build what I want to make.
Haste.
Okay, back again now, straight to the charts without wasting much time, straight to the US 30 analysis. Now this trade occurred, this was on a Monday at 11, you all can see, and I had my haste planned, of course, with my zones here, and you can see we have this zone where the market is consolidating at the moment. This was on a Monday, and now we have now the extreme lower end where the market, I was hoping to come and take now my extreme sniper and sharpest trader from that area there. But then before I can even come to those areas there, what can we see further? We have a vacuum block here. Yeah, now this one can be explained well by the ICT traders. Yeah, but then this was on Monday, so these are some things, or these are basically seen in futures or in indices. For example, the Nasdaq and US 30, these are common. Yeah, now this happened as a result of when the market closed on Friday. Now when it opens on Monday with volume shifting to the opposite direction, we can now have that vacuum block left there. And as a trader, you already know market targets liquidity and to fill the imbalances. So now looking for the closure of this vacuum block is something we can put in mind as one of the things we are planning for this haste we want to take for this week. Yeah, now this is a 30 minutes time frame. We have seen we have our vacuum block here, and the market so far is consolidating in this area here. And why is my alarm set at this extreme low end? Is because this area here, from now the far left, we have a pool of liquidity left there to be mitigated, and this is the exact zone from the previous video that I said earlier that we expecting the market to come and mitigate those areas there, because from the left we had a strong demand area coming from that area, and we still had some imbalances. So I was looking for the market to come at that area there and to take a trade from there. Yeah, now that is one of the things. And now if we go now to the next picture on the same Monday, you can see now this is the 4 hour. The exact is just shown here. I was now targeting these highs at this area here. Yeah, now I was waiting for the market to come and fill that vacuum block and manipulate, sweep those lows there so that it can tap in to now this liquidity, a pool of liquidity that was lying there at my alarm, which was set at a strategic place which we call 41,833.81. Now I was willing to take this trade from there. Yeah? Now this one is going to come out clear when I continue. Yeah, so okay, it is just the same thing. Yeah, the market had not moved yet. Yeah, now from there is when this was on a Monday. Now from there on a Tuesday Pretty much what the market did on a Tuesday was just to drop a little bit like that, and then I was just waiting for the market to come and do something like that. And after it has tapped me in, because this is a strategic area. Now, before I can even continue with explaining all this, the way I used to trade earlier is I could analyze the market like this, but then take the trade at the closure of the vacuum block. Yeah, but then I have not kept in mind we have a pool of liquidity to be targeted by the market, or a demand area in the market, a strong area of demand where the market can look to tap in and get more fuel, because usually say liquidity is the fuel of the market. Yeah, so I was taking these trades at the closure of the vacuum block, or I could trade towards the vacuum block, but then the market was easily going to take me out, because if it goes deeper to grab another liquidity below that area where now I have my stop loss, it means my stop loss was most of the time being taken out. And because nowadays I usually hunt liquidity in the market, so that is why it is easily for me to place my entry where I was putting my stop loss initially, so that if the market targets the liquidity, now I can now enter the market with now that stop loss wicking out now as the grab of the liquidity. So I trade on based on hunting the liquidity in the market. So that is why I avoided trading the market to come to this closure of the vacuum block, and then to target the liquidity of this zone here. That is basically whatever I was looking at. Now remember, this is on Monday, so it is the patience of the Heistmaster which is going to guide us from where the market is at this area here. Are we going to wait for this market analysis to play, or we're just going to give up and jump straight to another pair? Yeah, so that is why I'm against trading multiple pairs, because you cannot be patient enough to wait for this setup to play, and you will see there's another pair which is almost likely taking off. Yeah, that is when you develop something which we call FOMO, yeah, fear of missing out. You are like, okay, let me now stop this US30 trade because the GBP USD is almost taking off, and the ship can go without the Heistmasters in board. So let me now opt to this one. And once you just jump to that one, it takes you out, and then you find out, oh my god, the US30 setup just played the way I had analyzed. Yeah. So let us continue. Now from there was on Monday. Now from there I will quickly go to now where the market from where the market came to this place. Yeah, now remember, this was on Monday. The market never pretty much moved much. This was now on the Monday. Now this was on Tuesday. Now on Wednesday the market broke and now closed the vacuum area that I was talking about. Yeah, at the end of the day, now this was an area of inefficiency or imbalance in the market. The market has to fill that area there so that we can continue pushing, either pushing or continue to the right direction. Yeah, but then we still want this market to sweep the liquidity of that area there, so that we can tap in, stretch in to grab the liquidity in that demand area before we can now be tapped in this trade. Yeah, now let us continue. Yeah, now on Thursday, now this was on Thursday, on now London session, the market was now playing above my area of entry, and this is where most of the people make mistakes. For example, I am willing to take this trade opportunity from this area here, 41,833, but the market is like, it wants to reverse slightly above this area here. Yeah, you're like, okay, now I can miss out on this opportunity. Some of the time, yes, you can, but if you want to take this trade from this place here, if it does not tap you in, that was not meant for you. Yeah, just be patient, because your trade analysis tells you this is where you are willing to enter this market from. Yeah, so most of the time, if you engage yourself, if you find out yourself in this situation, just enter with a small position, yeah, which is not too risky. For example, if the market continues stretching to your area, you can be still in the trade, but with now little risk. Yeah, now from there eventually the market was like playing there, and now people will be like, okay, the market is about to reverse there. I'm seeing reversal patterns in this area here. For example, the market is just about to come and reject that area and continue now upwards, and then it retests and continues all the way. Now we have like a W pattern there, or whatever we usually call a double bottom. Yeah, now this is just a normal average thing a trader can go for that area there. Yeah, well, an experienced trader, out of the analysis I've done, I know where to execute this market from. It is at this exact place here. Yeah, now let us continue. From there, the market, after those reversal sign, it came, the market is building more liquidity. So it is like inviting buyers in the market so that we can have enough liquidity in the market. Yeah. Now the market is about to reverse. Now buyers participate in the market, and then we take them out with the selling momentum because we have not yet reached our destination. Let us continue. Yeah. Now, after it was now, look at this. Now this was on Thursday at 6 p.m. the same day. Yeah. Now we had a US30 buy fill limit order at price 41,832 point. Those numbers was now filled. Yeah. And now my alarm was taken out at the exact moment. For this was 6:44 p.m. Now when our alarm was taken out, it means we are now straight now in the trade. Yeah. Now in this particular kind of a trade, I was risking 3% so that I can make 8% and basically pass the first one without doing multiple trading. We're risking just a percentage, because in the former video I said a lot of time is wasted in trying to pass the evaluation and the challenge phase. Yeah, so it is better to go extreme aggressive risk on this challenge and the evaluation, and then now you can be conservative now once you're funded. Because what is the need of trading for 6 months only to blow the account once you're funded? So it does not make sense. Not only you have wasted your capital, and then you have also wasted the most valuable resource which we have, which is time. Yeah, now this is now the exact time when the market now tapped in to this area. Yeah, now if you go to the US30, the exact place, you can see from the left you have a lot of rejection from that area. It is a strong area because I have this zone at that area there. Now after I had seen the market in this place here, the next thing is, okay, the market has tapped into my area of interest. Now you can see this candlestick here. Wait first. So you can see how these other candlesticks were like small candlesticks, small candlesticks there. But then we had this, the massive one, the final stretch, like it is stretching. You can see how the market is struggling to get to that area. There is stretching to grab that liquidity there. And of course, tapping the Heistmaster, you already know, so that it can give me something to my take profit area. Now, if the market has tapped in to my now trade, I'm now officially in the trade. The next thing, just reverse, go to my take profit and look at the thing. We keep it simple, nice and easy. Yeah. Now after I was tapped in, let us see what went on after being tapped in. Remember, now we have swept over, we now tapped in this trade opportunity, and immediately after being tapped in, we are seeing now reversal. Now we are seeing now a rejection candlestick from that area, and now for the first time after now that massive red bearish candlestick, now we are seeing future now with now the bullish candlestick, which are now this blue candlestick now kicking in the market. Yeah, now from there you can see now my market has been executed at this area here. This was now my pending limit. Now I was in at 41,832. Yeah, now I'm in, and now pretty much the market is doing me justice. We are up $29. Yeah, this was more of like a baddest sniper entry. But then what can we see, or what can we learn from this area? Remember, we had a build up here, whatever we usually call a trend line liquidity. Yeah, so some of them people can be like, okay, the market has been bouncing there multiple times. So once it bounces here for the last time, and yeah, it had like a fake out and then closed in afterwards, and then they'll be like, okay, it has now break above those highs there. Now let me take the sniper entry from there, and then now you take a sniper entry to a stop loss of poverty. Yeah, because the market still has a target. So identify first the hunt. Where is the market targeting first, so that you can know when to execute, because this is not guesswork. Like, it is a roadmap of activities waiting patiently from Monday to now be tapped in on Thursday, and exactly after the market reaching in that place there, now we can see finally the market now has gotten whatever it wanted. It has no business staying at that area there than going to the TP of the Heistmaster. Simple, nice and easy. Let us continue. What you can see next, yeah, is pretty much the same. Yeah, and the about the trendline liquidity, you can as well see it here. The market like was had now that trendline liquidity. We had our breakout to reach to where we wanted to come in, and once the market now is at that area there, we can see the first rejection candlestick, and then sellers were still in the market, but then we are now seeing the sellers momentum is now dying. Yeah, because we are now seeing a doji candlestick there, and then an engulfing bullish candlestick there, and now we have now the momentum is like pushing upwards. Yeah, from a key area of interest, which is a strong area of demand. Yeah, now after there, now you can see this area there, the market kept on pushing well, and I was at now this is like almost 1.5% in profit, because I was already in $147 in profit. But then this did not just come as an accident. It is after awaiting of this setup to play from Monday until now Thursday. I'm in such profits. You can see I'm not like struggling in this. Yeah, now let us continue from there. You can see the massive momentum pushing now during London. Now this is London continuing pushing all the way, and from this area my analysis was like, okay, we have this zone here. If this London is going to break this and at least on a Friday close the market at that area there, then it is going to be fair. Yeah, now because this was now on Thursday, now this is Friday, the market is continuing pushing up. Now this is the following day, the market, now I wanted the market like to break and somehow close about that area there. Yeah, good to go. Yeah, now but then the market kept on pushing on well. Now at this area I was $200 in profit. Now this is where you can see the actual whatever I was talking about. You can see at this area I'm up $200 in profit, $258 in profit. You can see now that area where the market came, it came and took this liquidity, a pool of liquidity, and that area has multiple rejection from that area there. Yeah, so it is a strong area of demand. Yeah, so the next thing, the market was just to go straight to my take profit. I don't have much to talk in that area there. Yeah, now from there the market kept on pushing well, now at $280, and this area here, as we are about to break that support and resistance level we had there, I was at $300 in profit. Now we are 3% up. Yeah, so should I break even? No, I should not break even, because this is a swing trade. Yeah, so the market can eventually, because it is going to close on a Friday, the market can again come to manipulate this lows. Remember, now this is going to be the lows of the week. Yeah, now when a new week is going to come, it can sweep the liquidity of the previous week, so that now we can now take the collective whatever fuel of liquidity we had there, so that we can now have the final push to our area of interest, which is most likely at an area of a break of structure. Yeah, now after that we are at $300 in profit there. Yeah, okay, so these are my pictures there, and yeah, the market closed. Now the market closed, and then after the market closed on a Friday, it now started hunting now that liquidity, or to sweep now that low. Yeah, so that is why if I had gone to break even, the market could have eventually stopped me out. Hope you are together in this. Yeah, so the market came, and now at this area here, it came again, and now I'm at now break even. You can see now this is on Monday, now the following week. Remember, we had the first week where we analyzed the market and we were tapping on a Thursday. We were in profits up to 3% in, and now we are negative 10 in dollars. Yeah. Now, is this market going to reverse and now take us out, or do we now start regretting of the profits we could have closed? No, this is an haste. We have already have a risk management plan. Yeah, let the market do the thing it's supposed to do. Yeah, so we leave the rest to the market because we have already done the market. Yeah, now we can see at this place here, I'm negative $69 from a 3% in profit. The market came and swept the liquidity of the previous week. Yeah, and after sweeping this liquidity of the previous week, pretty much the market has nothing else to continue pushing down. So that is why my stop loss was at a strategic place and I never moved it, because bro, it was like the market has no business to come all the way to that area there where my stop loss is. Yeah, now immediately after the market swept the liquidity there, now I had to shift my, what is it, now the market went now to almost break even. Yeah, now I changed my risk management because I wanted to risk a 3%. I added another 1% position so that I can reduce the previous trade from now a 3% to a 2%. Yeah, so I removed it from a 3% to a 2% so that I can have the same risk. Yeah, but then now reduce my take profit from this area here to somewhere at about now these are 42,800 areas, because now I have now added another position in this. Yeah, it is basically the same risk. It is basically the same risk. Yeah, now I added it using a pending stop. So because I was sure now the market, after manipulating this low here, you can see it eventually like moved massively from that area, now continuing upwards. Yeah, now this was like a buy stop. If the market activates this buy stop order, the market now continues to take profit one to close at $200, and the final take profit at this area here to close now at $600. I could have eventually passed the first one for $100. Yeah, now on a Thursday, at about 10, now you see now this order has been triggered. Now the buy stop order has been filled in. The market was now pushing to the right direction. I was like, now I'm in two positions in the market. Yeah, now the market was like, you can see here at this area here, the market came for our sweep of that liquidity, or whatever you can see here. We had now a trendline liquidity in the market. Now that trendline liquidity, the market has taken it out, tapped in and swept the low of the previous week, and now we have this as our inducement low of this week. So basically, after seeing this, the market has no business to continue dropping down. So that is why at that area there, I added another position. That is not like more of a martingale strategy. It is after now understanding the market psychology or the market cycles or daily variance of this candlestick and whatever, now which made me have this like confidence to add on another position. Yeah, but then adding a position on a losing trade is now what we call a suicide mission, bro. Now why are you adding a position on an already losing trade? You are magnifying your losses instead of keeping your losses small and maximizing on your winning trades. Yeah, because this was a winning trade, I maximized, yeah, on another position. You already know. Yeah, now from there is when you can see the market skyrocketed all the way from that area there now to my take profit now on Tuesday. This was due because of now this week we had the US elections and the market went in crazy. Yeah, now I've used technicals and plus now the fundamentals which came in as a result of the US elections. These two played a major role in making this trade a perfect, yeah, trade, because you can see how we had this like a trendline liquidity. The market came and took it out and straight to manipulate now to sweep the liquidity of the previous week. We had our inducement low and the market quickly reversed from that area there, only to rest above my demand zone there, consolidated a little bit, wait for now the fundamental volume to kick in as Trump was being elected, and now the rest of the volume the rest of the volume went all the way to my take profit, locking at about $850 in profit, as I've just passed the first phase using this trade alone. Yeah, bye. Now these are the statistics. Trading days are 0 target, and then trading days recorded 2 days. I don't know why they had 2 days recorded, because maybe it was no, I'm not sure about it. Now the equity, we were supposed to make $800, but then to be safe we added 50 more in case of the, maybe because it was a swing trade over the weekend, we can have those fees or whatever to cater for. Yeah, now the $50, the above, could do all those things, but then pretty much it never counted. Yeah, so number of trader, 2 trades, win rate of course 100%, and the account size is a 10k challenge account. Yeah, now a lot of time is wasted to trying to risk 1%. You hit your take profit, you lose, then you end up spending a lot of days trying to pass your, yeah, like that. So it was as simple as that. Now on me waking up, I found out US30 sell, fill, close, limit order at price now at 42,760, where now my final take profit was, and that is pretty much what happened. Yeah, and it is as simple as that. So that was the trade analysis, and I believe in the trade analysis of this trade you have learned many things. Yeah, to be patient in the market and just not to interrupt. How many times have you moved your stop loss from where it was to break even, only to be taken out, and then the market continue to the right direction? Yeah, so it is not worth the risk. Yeah, now we're basically going to keep it simple, nice and easy as that. And some of them people, of course, can ask why today I came with the shares, because bro, I'm afraid of the brighter future of this challenge, from a humble beginning of a $10k account to right about a 200k in funding, which is a series that we are starting from today. This is episode 1 to the episode whereby we are going to hit the $200 in funding. Always keep it simple, nice and easy. In case you don't know that, then you have yourself to blame. You're in trouble. Panditing. Peace out.